A net wealth tax is a tax on the net wealth of individuals, so assets minus debts. And it's usually levied on only certain individuals above a certain threshold of wealth, so it doesn't apply to everybody. And the important part as well is that it's a recurrent tax. We're talking about annual wealth taxes.
So the base on which a net wealth tax would be levied includes all the wealth somebody owns. Property, obviously. Also financial wealth, such as bank deposits, shares, bonds. But also valuables, like art and jewelry, fine wine and classic cars, and ownership stakes in private businesses. From all that, you would deduct the debts somebody owes, a mortgage on their house, car loans, money they may have borrowed to invest. And finally, you would deduct a tax-free allowance. And with all of that, you would arrive at the taxable wealth on which an annual rate would be levied.
And the list of taxable assets could go on. Private jets, pension plans, trusts, horses, intellectual property.
It doesn't work. So I'm to be honest, I'm bemused we're still having a conversation about it.
They didn't raise that much revenue in the countries that had them. An increase in the value of household wealth doesn't necessarily translate in an increase in wealth tax revenues. It was relatively easy to avoid and evade wealth taxes. If you live in your house, it doesn't give you a return, it doesn't give you income that you can use to then pay the tax. And so we always give this example of, the retiree in a house that has tripled in value in the last 30 years and they're faced with the wealth tax.
It's incredibly cruel, very unkind to people who hold wealth and are unable to come up with cash. How do you value a private company? How do you value land? How do you value a picture? How do you value the things that make up wealth? This is an extraordinarily intense admin effort we have to be put into this. But the idea that your personal belongings should somehow be catalogued and valued by the state, I think is very intrusive.
There is definitely anecdotal evidence of people leaving countries with wealth taxes.
This is a setup, a warning of the ugliness to come. The greatest wealth transfer in history is here, the Bible of the left, laying the groundwork for the seizure of your money. They don't think it's fair that older people are rich. Don't kid yourself, you didn't make that money by hard work, drive, brains and good judgment. Oh no. Since the vast majority of baby boomers with money are white, their white children and white grandchildren will inherit the money, thus continuing racial inequality. This is a setup for a wealth tax. You add up the value of all your stocks, bonds, houses, businesses, even your artwork, then you have to fork over a portion of that wealth every year to the government. It doesn't matter whether your investments are up or down, just having money is the excuse to take it off you. They do not respect success. Think about this. You have saved, invested, you've done the right thing, you've worked hard, and you plan to pass along what you've made. So stand up and demand the respect you deserve.